Subsidiary books is also known as books of prime entry or books of original entry. A subsidiary book is a book in which we record the first entry, or what we call the original entry, of a transaction. Any transaction of a business will have to be recorded first in the subsidiary books, then it will be posted in any other accounts. So we have subsidiary books. Number 1, sales day book. Number 2, purchasers day book. Number 3, return inwards book. Number 4, return outwards book. Number 5, cash book. Number 6, petty cash book. Number 7, general journal. So we are going to see one by one. First, we are going to see the sales day book. The sales day book is also known as a sales journal. A sales journal will record all credit sales of goods. Only sales of goods on credit, not sale of non-current assets. Only sales of goods will be recorded in a sales journal, or what we call sales day book. Information is obtained from a sales invoice to be recorded in a sales day book. A sales invoice gives details of goods sold to customers. So we are going to prepare the sales day book from the information obtained, that is from the sales invoice. And then the total of the credit sales in the sales day book will be posted to the credit side of the sales account in the general ledger. The individual amount of credit sales, that is to credit customers account, will be posted to the debit of in the sales ledger to the debit of the credit customers account. A sales journal does not form part in the double entry system. That is, there is no debit or credit in the sales journal. We have date, details, dollar, and so on. There is no debit and credit, so it does not form part in the double entry system. This subsidiary book, the sales journal, will take only trade discount into account. It does not take into account cash discount. So we are going to make a recapitulation of what we studied so far concerning sales journal. A sales journal is also known as sales day book. It will record all credit sales of goods. Information will be obtained from the sales invoice to be recorded in the sales journal. The individual amount of credit sales will be posted to the debit of the credit customer's account in the sales ledger. The total credit sales will be posted to the credit side of the sales account in the general ledger. So we make a summary. The first one, sales invoice. From the sales invoice, we record in the sales day book, and then sales ledger, debit in the credit customer's account, and then general ledger, credit in the sales account in the general ledger. So this is the sales journal. Now we are going to see the purchaser's journal. The purchaser's journal is also known as purchaser's day book. It records all credit purchases of goods only. It does not record credit purchases of non-current assets. It will record only credit purchases of goods only. Information will be obtained from the purchaser's invoice to be recorded in the purchaser's day book. The individual amount of credit purchases will be posted to the credit side of the credit supplier's account in the purchaser's ledger. The total credit purchases will be posted to the debit side of the purchaser's account in the general ledger. This subsidiary book also does not form part in the double entry system, that is, there is no debit or credit in the format. We have date, details, and dollar. so it does not form part in the double entry system. So I repeat, a purchaser's debit is also known as purchaser's journal. It records all credit purchases of goods only. The individual amount of credit purchases will be posted to the credit side of the credit supplier's account in the purchaser's ledger. The total credit purchases will be posted to the debit side of the purchaser's account in the general ledger. It does not form part in the double entry system. It takes into account only trade discount. It does not take into account cash discount. Now, return invoice book. Return invoice book is also known as return invoice journal. It records all goods returned by credit customers to the business. Return invoice. Information is obtained from credit note issued to customers. It is from the credit note issued to customers that we can prepare the return invoice journal. All information will come from the credit note issued to customers. Credit note implies that there is return of goods either by the business or by credit customers. So return invoice, goods returned by credit customers. All information will be obtained from the credit note issued to customers. The individual amount of return invoice will be posted to the credit side of the customer's account in the sales ledger. The total return invoice will be posted to the debit side of the return invoice account in the general ledger. So information will come from the credit note issued to customers. Then we prepare the return invoice journal. Then we have to transfer from the return invoice journal to the sales ledger, debit in the credit in the customer's account in the sales ledger, and the total of the return invoice account will be posted to the debit of return invoice account in the general ledger. Now we are going to see return outwards book. A return outwards book is also known as return outwards journal. It records all goods returned by the business to suppliers. Information will be obtained from the credit note received from suppliers. Credit note received from suppliers. The business is receiving credit note because the business returned goods to suppliers. So whenever any person return goods, it will have to obtain it to receive a credit note. So the business is receiving a credit note. It means that the business is returning goods to suppliers. So credit note received from suppliers will be used to prepare the return outwards journal. The individual amount of return outwards will be posted to the debit side of the purchaser's ledger, that is in the creditor's account, credit supplier's account. The total of return outwards will be posted to the credit side of the return outwards account in the general ledger. Now we are going to see the cash book. The cash book is the only subsidiary book which form part in the double entry system. That is, it has debit and credit side. It records all cash received and check received and cash paid, check received from credit customers or payments to suppliers. It records all receipts and payments of cash and check only. Information is obtained from the check counterfoil or from cash vouchers to prepare the cash book. So information is obtained from check counterfoil or cash vouchers to prepare the cash book. The total of the debit side is called the total discount allowed on the debit side of the cash book will be posted to the discount allowed account on the debit side in the general ledger. The individual amount of discount allowed will be posted to the credit side of the customer's account in the sales ledger. The total receipts of cash will be posted to the cash account in the general ledger. The individual amount of cash received will be posted to the credit side of the credit customer's account in the sales ledger. The individual amount of check received will be posted to the credit side of the customer's account in the sales ledger. The total of check received will be posted to the debit side of the bank account in the general ledger. On the credit side of the cash book payments, the total payments of cash and check will be posted to the cash account and bank account on the credit side of the cash account and bank account in the general ledger. The individual amount of payments of cash and check will be posted to the purchaser's ledger on the debit side of the purchaser's ledger and on the credit side of the customer's account. So here we are so far concerning the cash book. Petty cash book. The petty cash book will record all small expenditure items made by cash or by check, for example, stationeries, traveling, and so on. Finally, we have the general journal. The general journal is used to record all transactions which are not recorded in the other subsidiary books. The purposes of the general journal is to record purchase of non-current assets on credit, sale of non-current assets on credit, bad debts, correction of errors, transfer balances, and so on. Any other item which are not recorded in the other subsidiary books will be recorded in the general journal. So we are going to make a recapitulation of all the subsidiary books. We have the first one, sales daybook, is also known as sales journal. It records all credit sales of goods. Information is obtained from the sales invoice to be recorded in the sales journal. Purchasers daybook records all credit purchases of goods. Information is obtained from the purchaser's invoice. Return invoice book is also known as return invoice journal. It records all information is obtained from the credit note issued to customers. Purchaser's return journal is also known as purchaser's return book. It records all goods returned by the business to suppliers. Information is obtained from credit note received from suppliers. Cash book, it records all receipts and payments of cash and check only. Information is obtained from cash vouchers or cash check counterfoil. The petty cash book records all small expenditure items such as stationeries, traveling, and so on. The general journal records all those items which are not recorded in the other subsidiary books. We have purchase of motor van on credit, sale of motor van on credit, bad debts, profit or loss on disposal of non-current assets, provision for doubtful debts, and so on. So the general journal is used to record all those items which will not be recorded in the other subsidiary books. So we are going to explain to you a bit on credit note and debit note. A credit note implies that there is return of goods either by the business or by credit customers. In case credit customers is returning goods to the business, so credit customers is expected to receive a credit note from the business. So credit note issued to customers means customers have returned goods to the business. That's why the business is issuing a credit note to customers. Anyone who returns goods will have to receive a credit note. In case the business is returning goods to suppliers, the business is expected to receive a credit note from suppliers. In case the business fails to receive a credit note from suppliers, the business will have to issue a debit note, which means that debit creditors account. In case the business fails to receive a credit note from suppliers. Credit note and debit note can also be used in case of undercharge and overcharge of accounts. In case the debtor's account is undercharged, we will have to send a debit note to the debtors to increase the debtor's account. In case the debtor's account is overcharged, we will have to issue a credit note in order to reduce the balance of the debtor's account. In case creditor's account is undercharged, a credit note will be signed. In case the creditor's account is undercharged, is overcharged, so a debit note will be sent. So this is the implication of debit note and credit note. Credit note and debit note can be used for two purposes. One, when there is return of goods, and the other, in other cases, when there is undercharge and overcharge of accounts. So next time we will come with some more precision on subsidiary books. Thank you very much.